Yes, guys, right. The setup of this video is not its usual thing, purely and solely because Harrison has decided that my camera, would be better off in his hands for vlogging his stuff because he's forgotten his camera. So I've had to go about setting up my shit completely different. So this week's video is going to be not like the others where it's like me in the front straight away and then we move over to the charts. We're just going to get straight on to the charts and talk about last week. But last week was pretty slow, pretty bouncy, but still profitable. A very good week. I brought back, obviously everyone that's watched last week's will know that week I actually was at a loss, 88 pip loss. But this week I managed to do, I think it was around 235 pips. But don't get me wrong, they weren't as clean as I would have liked them to be. There was a lot of messing around on the currency pairs that I normally trade, and a lot of accumulation because we were still waiting on some heavy news that happened on Tuesday, and then I think there was Wednesday as well, and then Thursday as well. So there was a few news days that still kept the market quite volatile. So I knew that was going to be the case, so I kept the risk quite small. And I only took one loss last week. It was a bit unlucky, literally was a loss, then went to take profit. So it is what it is, but I decided to leave gold alone for the week after I took the one loss. I did have a few wins, some sort of, closing off 50%, leaving the rest to run, that type of stuff. That's how I like to kind of trade because it just means that you're securing some profits in a good amount of profit and then leaving the rest to run. One of the trades that we were in on Tuesday didn't even hit TP until Friday. Given that the TP was quite far away, it was a bit of a longer swing trade, but it goes to show how if you believe in your bias and you believe in where your TP is, then you should hold the trade throughout. Don't get me wrong, when people are first starting out and they're first getting into this, there is no way that I'm expecting them to hold a trade for 4 days. It's just not possible. People haven't got the emotional factors built into them when they first start out to see, a good amount of profit, then a retracement, and then a good amount of profit, then a retracement, and then maybe even a dip near to entry, and then a progression to the upside. So normally 9 times out of 10 most people will just close in profit and wherever they feel comfortable or wherever they think, yeah, that's a decent amount of money, I'll close out. So it's one of those, it's definitely a learning curve. It's still a learning curve for me. I still sometimes look at trades and go, is this actually going to hit the overall, or am I better off closing and then I've taken all risk off the table, I've made some good money, and if it does hit TP, it does hit TP. But even if it does hit the overall TP and you have closed the trade maybe 40-50 pips below where the TP is, don't be pissed off. The market has given you that amount of movement and you've made money from it. Don't be then butthurt if it then goes and hits your overall TP. Take it as a W anyway, because it just shows that your analysis was correct. Regardless if you had the emotional factor to hold on to it, you still were correct in your analysis. And the analysis means more to me than the actual money made in the markets. Because the more and more your analysis becomes consistent, it means the more money you can potentially make in the future anyway. But your analysis and your predictions and being able to notice stuff in the markets is more valuable than just the money side of the coin. The money is don't get me wrong, the money is nice, but getting to the point where you actually have your aha moment, i.e. you're noticing patterns, you're noticing structure, you're seeing levels, all this sort of stuff, liquidity, identifying these things in the market means that you have got a lot longer kind of career in trading than you have if you just don't really know what you're looking at and you're just trying to buy the low and sell the high with no real back knowledge. So gold for me, look, it was a very, very choppy week. But then, like I've said, choppiness on gold can still be very, very, profitable because the choppiness is quite a big pip range, from pretty much, Monday Monday through to Friday, it's kind of stayed within 21.79 and 21.52. Now that is a 300 odd pip range. It's not a small range, but you know, it's shown that it's accumulating within this range to then break back up to, you know, all-time highs and maybe even pushing a bit further, or if we are going to start collapsing back down to the lower ends to start filling these imbalances. But gold has definitely had a bit of a breather this week. But then it's the same with Bitcoin. Bitcoin's had a bit of a breather. This is Bitcoin correcting itself. Bitcoin is trying to find, right, where is a stable floor to potentially push to the upside, or it's just going to completely collapse and wipe out a lot of people and leave a lot of people at a loss. So this is why I tend to kind of stay out of Bitcoin. I don't really play around with it that much. But gold's kind of done the same thing. It's trying to find its floor. Now, I put this post out on my Instagram. I think it was Wednesday or Thursday. This is the overall area I'm looking for a then move to the upside, another push to the upside. Because regardless of us making this all-time high, we will, in my opinion, come back to retest this all-time high to then even see if this is the ceiling. You know, just because we've put in a high does not mean that that is the end of it, you know? So whether or not it is here, and like I said, the reason why my position or what I'm speculating from gold to push back to the upside is this area from around 21.50 to around 21.45, 44 is the previous all-time highs kind of resistance area. So when I say this, it's, you know, this was the all-time high back in December 2023. And since breaking that all-time high, we haven't actually come back to retest this area. So this is why I'm feeling like gold is kind of, it's in a bit of an descending channel down to this area, regardless of the lows kind of being broken. It is looking like it wants to come down here, take these liquidity areas, and then potentially push from here back to the upside. So that is what I've been looking at. This setup, it triggered on Friday, but I didn't take it purely and solely because it's just Friday and I don't really take trades on a Friday. Friday is its own day, so I tend to kind of stay out of the markets. Now I've brought the mic closer, it'll probably sound a lot better. But again, simple. You know, most of you guys know I trade trend lines as well. A, B, there's the C bounce. So I would probably anticipate seeing this low taken and this low taken next week, and maybe even these lows as well, to then dip into this area to then take a long position. Daily time frame, you know, we're not looking like it's a lot of volume is pushed in within this course of this week. We did have inflation that came out on Tuesday. Okay, so that is the indication that, you know, they're taking a bit of a breather when it comes to rate cuts. But, you know, whether or not this is going to collapse like down to 2100 flat, you know, I would like to see how this area plays out first, you know. So even if we get down to here and we don't maybe project from this area, and it does look like the continuation is going to be to the downside, then I'd want to see a break and retest of this area and then continue to the downside, or then push up. So it's going to be one of those weeks where, you know, you've got to kind of play it by look, play it by ear. We don't, as far as I know, have a lot of news out next week, which is quite good, apart from Fed interest rate decision. But like I said, look, the forecast and the previous there look to be kept the same. When it's just going to be the same, it can do one or two things. Do you know what I mean? It can either go up or down. Do you know what I mean? So it's a very kind of, it's one of those ones that you're going to have to try and just sit on your hands and literally react when it shows where the momentum is going. So the only other pair that I traded was GBP-JPY. GBP-JPY, we took this on Tuesday, and this is the one that took, you know, 4 days to actually meet its overall take profit. And this was a simple, almost double bottom. So double bottom, but swept liquidity from this low here. and we broke structure to the upside. So we broke these highs here, and I was waiting for the retest. Now, I had this imbalance marked out here, but we almost just broke down through this one, and I think it was on the lower time frame on the 1 minute chart that I'd seen this. It was this imbalance here that I was waiting on. So I was waiting on this liquidity area to be swept here, and it was off of this imbalance here that I was looking for. Now, it's one of those things when you're on the lower time frames, like the 1 minute, and I said this, replied to a comment on my Instagram where I said, you know, he was like, what entry do you take like your entries off of, 15 or 1 minute? And I said, when the 1 minute is too noisy, I will tend to just look on the 15. But if the 1 minute actually does show a decent kind of, you know, structural formation or imbalance and all that sort of stuff, then yes, I will take it off the 1 minute. But nonetheless, we did have this almost kind of fake out, and then we swept liquidity. So I had this line here that was the previous area of liquidity over here, and it was a buy limit. GBP JPY buy limit 1.88.20. So if you see, I mean, it was 188.266, but I think it's because I've been on this chart so many times that I've moved it. But nonetheless, let's just for the video put it up by -0.4 pips. There we go. 1.8820. Stop loss was 187.963. So yeah, 950. So this is obviously just where I've moved it. And we started off with the overall TP being 189.300, but then a little bit later on, when we looked like we were having a good amount of momentum to the upside, I said extend the TP, because I only put one position on, extend the TP to 190. We had brought the stops to entry on this one because we did leave with a good amount of momentum to the upside. And with GBP JPY, when it wants to move, it can move, okay? So given that the entry was down here, I saw this very nice bullish momentum candle to the upside, and I was like, yeah, okay, this was the right area to take it from. We had this little pullback, we had another push. So I think we were around here when, you know, I was even like, right, put stops to entry, because that's a good 50 pips away from our initial entry. So we should be nice and risk-free. And yeah, I think it got round to here. Then it was just dancing around. And all I was doing on the way of watching this position on a daily basis was just marking out areas of imbalance. So I saw this, obviously this 15-minute candle here. This produced an area of imbalance. So I marked this area out. And we kind of just bounced around this one. We then, on the sell side, created this imbalance. So I was like, okay, so I marked this one out as well. Because if it looks like it's going to reject and strongly reject, I would have just said, right, guys, close. But knowing that imbalances can then turn into inverted imbalances, I kept it marked out. Now, again, it had these imbalances down here as well. So we broke through this. So I was like, right, it's an invalid imbalance. But then we broke back down. We then obviously tapped into a few imbalances on the way down. And then we pushed back up. We created this imbalance here. So I marked this one out. This got rejected here, but didn't really move until, you know, a little bit later on. We produced this high. But all the while I was looking at these buy-side liquidity areas over here. So I had this one marked out here. So that one got swept from that high there. So again, it was like, right, okay. But we've also got these liquidity areas as well here. And the overall target was this area of imbalance on the 4 hour. This big area of imbalance on the 4 hour. So I was like, right, I want to see this area filled. And do I think it's over? Possibly not. But I wanted to see this area, at least 50% of it filled, which, you know, at the overall, it did end up doing, but it went through a lot of news. It went through inflation, which will affect JPY pairs. It also went through PPI, which affects JPY pairs. And it also had some random ass, not even on MyFX news outlet, was the Bank of Japan looking to, I think it was suppress raising rates or something like that. So we had, I think this came off of this weird 4-hour candle here, and it kind of just then just sat stationary for a bit, and then this was again off of, I think, on Friday just made it push to the upside and closed out the actual overall trade at 1900 flat. So, you know, and that was 4 days. 4 days of watching this thing, you know, not move. 172 pips, don't get me wrong, is not a bad, like, trade. It's not, you should be patting yourself on the back if you can pull something like that out of the bag very early on. And if you are following along me, even holding it for a good amount of time. Don't get me wrong, we had closed out this trade in the group. We closed out this trade in the group because I saw this sort of double top happen up here. And then, you know, these rejectional candles to the downside. I was like, right, close out. I think it was around 189, 359, 100 pips. And just, you know, if you want to leave a little bit on the table, fine. But if you don't, no one's going to hold it against you. But still, I held a little bit on the table. You know, it wasn't a massive amount, just to see if this was going to play out. Because if any of you remember, I don't know, maybe 3 or 4 weekly breakdown videos ago, I actually said I was fucking JPY pairs off because they were just being dicks. But having learned all this new stuff, I'm trying to bring just 1 or 2 JPY pairs back into the mix, Euro JPY and GBP JPY. When it comes to other pairs, GBP AUD, you can tell by my actual breakdown of my pip count for the week, break evens. GBP AUD closed at break even, 15 pips I made out of GBP AUD. And again, this was purely and solely based on the same sort of basis, same sort of setup as GBP JPY. Now, I'd seen this on, I think it was Tuesday, so the same time that I sent out GBP JPY. We had this kind of depletion down. Okay, I think, and this was, I'd marked out this area of imbalance over here from this initial spike down. Now, don't get me wrong, we'd had this here, okay? We'd had this kind of trickle down, and this was off the back of, it was on Tuesday or Wednesday, I was waiting for news for GBP news. I think it was GDP news for GBP that I was waiting to almost, because the forecast was that it was going to come out better for GBP, so that would have been bullish for GBP. So I was like, right, you know what? I'm going to hesitate that this is going to tap into this area and then we're going to have a push. So that's what we kind of had happen, but not to where I was hoping. These areas of liquidity was where I was targeting to then also be targeting this area imbalance here and overall this area imbalance up here. But it far-arsed around. Definitely tapped us out at break even way too many times. But there is no harm when perhaps things aren't moving the way that you thought they might do, or from the areas that you thought they might, you know, project from. There's no harm in bringing your stops to entry and making the trade risk-free. You know, it's not always good practice, but I feel like if the market is accumulating like last week was, it's a good practice to get into because it means that you're taking risk off the table. And, you know, if you get tapped out, okay, cool. It's obviously not meant to be moving from this area. Maybe I need to reevaluate. And that's just what was happening on GBP AUD. You know, it wasn't probably until looking back, benefit of hindsight, looking back in time, that, okay, well, after we had all this accumulation over Wednesday, you know, this kind of area of imbalance was produced here. This area of liquidity was resting here. And yeah, but GBP AUD, don't get me wrong, boys, it literally gives you the ugliest price action in the world. You know, all of these 15-minute candles, these 15-minute dojis, just indecisive. And it wasn't until here that, okay, yes, you could have got in and you wouldn't have dealt with much fuckery. But again, regardless of me going, right, I got tapped out at break even, all of my positions were buys. I was looking for buys from around this entry. If you look on my first initial entry, which was on March 11th, so it would have been Tuesday, 93,173. So 93,173. So from this area of support, this was my area of entries. Now, okay, stop loss, I kept it tight. Stop loss was only 23 pips, 24 pips, just round it up. 23 pips with the overall target of being 94,800. Now, 94,800 is up here. It is only 70 odd pips away from there. But you've got to look, this was my area of bias for GBP AUD. Not once, but then we also hopped in again. Twice. Again, 3 times. And all it was doing was just, you know, giving me minor movements. But other GBP pairs were moving nicely. GBP JPY was moving nicely. So it is what it is. But look, when it comes to next week, this was, you know, this is the area that I've been looking for a potential rollover to the downside. And I think it's still targeting these areas of imbalance, like I said. So I will be watching GBP AUD. The reason why is obviously, look, we've got this very big daily imbalance here, which is looking to be filled. This is obviously the top of this wick here. So this is where I'm looking for, you know, the perfect placement. So maybe 195.100, as this has been seems to be the area of resistance right now. It can't seem to break above 195. So maybe this is the third test, the third retest, and then GBP AUD just go, do you know what? Fuck this. GBP goes to the downside. So we'll be sitting on my hands when it comes to that. GBP JPY, same sort of basis. I am looking for the continuation now to the downside. I feel like JPY index, we've come back down into the area of imbalance that I had marked out. Okay. To see if maybe on next week, this is where we get the volume. You know, we've had the retracement, filled the 2 areas of imbalance, and we're going to the upside. But on the flip side, you've also got to look over here. We have also filled these imbalances over here. So maybe this was just a retracement, and maybe this is actually GBP, JPY, or sorry, JPY pairs now making another further push to the upside. But I would like to think that, you know, JPY has pushed quite a number of weeks, months to the upside. So I would like to see a bit more of a retracement back down to then, you know, maybe potentially push to the upside. So Euro JPY, this is what I've got marked out for next week. Again, just my bias, but problem we've also got is we've got A, B. Maybe we need to see a C bounce, but maybe this is going to dance about and have one bounce back down here and then maybe push back up to here. Or, you know, again, we've got a rounded top at the top of this. So 1, 2, 3, so a rounded top. Maybe this is going to be, you know, where potentially that is A and then it is B. Because like I said, sometimes trend lines, they don't always align with, you know, the highs and stuff or the lows of stuff. Like they do kind of break out, come back in, but that's still classed as a bounce or a rejection. So Euro JPY, I'm looking to take short. GBP JPY, I'm also looking to take short, targeting these liquidity areas here, and all this bollocks and consolidation rubbish. You know, double bottom here, so there's going to be a lot of liquidity resting below here. But that is not to say that we might not revisit this. So I'm also taking that into account. So I'm watching this area carefully. I'm watching to see how 190 actually holds up. If it is now resistance, then yeah, okay, we're going to the downside. Other than that, AUD pairs, look, AUD has needed a bit of a sell-off. Whether or not this is still the one, I don't know. But we've kind of broken out of here. So again, I only look at AUD CAD, NZD CAD, because that is what the algo is run on. I had a relatively decent position on oil, and this was on Thursday night. You know, we had a nice rejection from this area, which is where we went short, and we danced about. We had a little bit of a dip back down, but look, oil, I'm definitely looking for a good sell-off next week, so I will be re-evaluating where it may potentially need to go. I reckon we will take the overall high of this last week, feel this area of imbalance, potentially test this trend again, and then this is where we will be looking to take a nice big swing to the downside. I reckon even down into 76,500 would probably be my overall swing holds. But then again, we have got this area over here. So I'm definitely going to be looking for oil shorts next week. And gold, like I've said, I've already gone through that. That is my area of entry for gold. But GBP, USD, Euro USD, haven't really been, you know, focusing on these pairs too much. But let's, for argument's sake, just mark up Euro USD. Looking at the daily time frame, you know, look, strong rejectional area from here, round number of 109,500, which has played an area of resistance in the past. But then again, having said that, we have still got these daily imbalances up here. Now, there's a lot of kind of stuff coming out in regards to DXY that I feel like is going to affect it, you know, long term, the longevity of DXY, and that being the fact that countries are pulling away from the US dollar. So that is going to evidently make it weaker. So, you know, even on the flip side, we did come back and we filled this area of imbalance over here, but that's not to take out the fact that we have got these ones down here as well. But at the moment, you know, USD pairs are still bullish. You know, despite the fact that we've had what we've had on DXY and the yields, USD pairs still remain relatively bullish, okay? Given the fact that we have got this very small area of imbalance, the overall kind of trends on the weekly time frame, it still looks to be in a downtrend. I mean, even taking the trend line from the top to the bottom here, we're still kind of staying in this downtrend, and you've got to take it from that high all the way through. The weeklies, the weekly overall can be a long time until it actually comes back and tests the trend line anyway. But the same with GBP USD. GBP USD has been in a long kind of, I'd say, slower move to the downside, but could this be the floor? I think it is. I think it has found the floor over here. If you can look, this bounce over here and this one over here, this is where I do feel like GBP USD is targeting the upside, so it's a bit more bullish, but we will see. We will see. I mean, GBP USD pairs overall have just not really been that nice to read anyway. I wouldn't say they've been the most delivering type pairs. Look at all of this 4-hour accumulation, not very nice at all. So again, this is why I'm saying, you know, when pairs aren't looking somewhat easy to read, then stay away from them. Like, okay, it might be hard for you guys that are just starting out and just learning, because you might only just have 1 or 2 pairs, and if they're not showing any nice, decent kind of that readable market price action, then you're kind of stuffed. But you've also got to remember, and this is where I'll probably do a video this week. I know I keep saying it, but I feel like I've got enough knowledge now to start bringing you the beginner steps of the quarterly theory. You've got to remember that, you know, this just might be an accumulation week, so it's not going to produce good price action. A lot of the daily candles are pretty indecisive, apart from these ones here. But evidently, this has created a very big bearish candle. So with that being said, you know, maybe we are going to target potentially down here for its next push to the upside. We shall see. But yeah, other than that, not really many pairs to go over. GA, GJ, UJ, EJ, GBP USD, Euro USD, and gold. I've given the reasons over what I'm looking at, what I'm potentially gonna throw out in the elite group. You know, a lot of good stuff going on in the elite group. Deco's been in the group putting out some gems, you know, some meme coins and all that sort of stuff. But you know, the guys are in there just, you know, putting a small amount of money and maybe like 5x in, 50x in, or whatever it might be. I don't really know about too much about it. I do just put my own stuff in. But yeah, it's been pretty up and down in regards to people taking their own trades, profit results and stuff like that. It's kind of, like I said, there are a few people in here that are just on funded accounts as well, so they are taking, you know, bigger positions based on their funded account size. Algorithm's been doing all right as well pretty much this week, but it's one of those just kind of set and forget, and that's about it. But yeah, I am going to do the quarterly theory video this week, and I'm going to push that out. In regards to this weekly breakdown video, it's not set up how I want it to be, but I'm without a proper camera. I'm doing this all through a webcam, which is great. So hopefully the camera will be back next week for me to do that. But yeah, we'll like I said, there's not been any kind of comments that have been put down below that I've been thinking, right, that's actually a really good video to do. So if you do have any content ideas, just put them down below and I'll try and do a video on those. But anyway, take care and we'll see what this week brings in the markets.